since it's from scratch today, so we can go from basic to beyond at this point, you know. So what you looking at right now is my charts on the currency pair USD JPY, and I would be trading the US dollar against the Japanese yen, right?
Gotcha.
And in this case, when you see the pair, you see this USD JPY right here. You're looking at USD to go up, and the value of the JPY to go down. So anytime you see these candles go up, that means the dollar is stronger at that particular time. Whenever you see the candles go down, which are the red candles, that means that the yen is stronger at the time, right?
Gotcha.
And that's what you want to make your trades off of. You want to use these candles, which they represent price action over a specific time frame, right?
Let's see. Yeah.
You see, let me zoom in a little bit. And the candles themselves can be measured, you know, from a month down to 1 minute, right?
Okay.
This what I'm explaining, it is also you can also apply this to stocks charts as well. So,
yeah, I remember that, like you said, the candles and how it starts off.
Yeah, and if you're looking at a candle that's bullish, which means that it's going up, you're looking for the candle where it starts. This is where it opens for this particular hour.
Okay.
This is where it closed for that hour. And then these long lines here are called wicks. And those show the extremes that it went for that hour. So it opened up here. It went all the way up here. It went down here at some point within that hour. And it likely opened up. It likely opened up, then went down.
I see.
Came back up and pushed all the way up here and came back down.
Okay. Good
and
stuff.
The same way for the red candles, but in reverse. Let me see a really good one. So like this one right here. This one right here. So this works in the opposite. So in this case, the candle opened up at this hour, which this hour is 1600 GMT. This candle opened up here at the top.
At the top, yeah.
It went up to this extreme, and then it came down to this extreme, and then closed right here. So that's represents that particular hour, the price action within that hour. So from here, you can either take a trade from whether you think it's going to go up or down, and you want to base that off of what the candle's telling you to do. And so inside of each of the candles live like a series of candles create a pattern. Like this particular 2 candle pattern right here, this is called bullish engulfing candle. And that means that the price action is likely to push up after this pattern. And it's because all of the price action from this downward candle is engulfed by this blue candle. Like everything is inside of this candle. And then you can notice following it, it pushed up a little bit. It didn't keep going, but it pushed up some. So, and then the opposite, this is a bearish. That means that the market's pushing down. Bearish engulfing. This red candle engulfed this candle. And when you see those candles trigger, like those candles are trigger points that you should take in consideration if you're going to look to enter into a trade to go in either on the downside or on the upside. And you can trade both ways. You can trade up or down and make money. So, and these type of candles signal that there's going to be a change in the direction of the market, because you got a lot of sellers right here that are pushing the market down, and you got a lot of buyers right here that are trying to push the market up. And when you're looking at the market, like, it doesn't necessarily just shoot right up and just go wherever you think it's going to go. It moves in waves. So this bullish engulfing signaled an uptrend, right?
Yes.
And it went up, but it came back down and created another level to trade from. And then this level, it pushed up from this level and created another level to trade from. And it just kind of went up and continued up after that point until it got to this candle and pushed it back down. I think this was news that caused this down move right here. So you want to, the way that I trade, I look for trending markets, either an uptrend or a downtrend market if I'm going to trade. And I'm going to show you the difference between the two. Let me pull it right here. An uptrending market. I got a couple of examples, but I want to show you outside of the chart first. So, uptrending market looks like this. You create a higher high, and then you create a lower high, and you have continual higher high, higher low, higher high, higher low. And in reverse, you want to see that on the downside. So this determines where the trend is going. Like, you got an uptrend, higher high, higher low, higher high, higher low. And if you're in a downtrend, you create a lower low, a lower high, a lower high, lower low. And to see that on the market, a good pair to look at right now is GBPUSD. So notice that you got the low right here.
Yes.
You got a higher high. You got a higher low. You got a higher high. You got a higher low. You got a higher high. You got a higher low. Another higher high. And now we are sitting at this level trying to determine where this is going to go from here. And if you're looking at a downtrend, you're seeing the opposite. I think this came from the downtrend. So let me go up to the higher. Downtrend is this. You got your high, higher low, higher high, lower high. You got your start of your downtrend. You got your lower low, your higher, lower high, lower low, lower high, lower low, lower high, and then you got your rejection down here. And so you can trade in either direction. You can trade down, or you can trade down, or you can trade up. You can buy the market, or you can sell the market, and you can make money on either occasion. So you just want to make the most highly probable trade that you can based on what the market is telling you.
Very good.
So right now, I'm looking at this trade. And all these lines that you see on my chart, yes, these are lines where price has rejected at some point and then turn around in the other direction. Those are called support resistance levels. The support and resistance level represent areas where price has had trouble breaking through, or price has had trouble breaking through to the upside, or price has had trouble breaking through on the lower side. When you're down, when you have price near the bottom, that's like support. So think of support as a floor, right?
Okay.
I can't price is probably coming from a downtrend, right? And once it gets to the floor, it can't break through the floor, right? So that's why you see price rejection, rejecting right here. If you're looking at this area, this is the ceiling, this is resistance, right? Price can't push above this point, and price eventually, the buyers can't push the price up higher than this level right here. This little level right here. This is resistance right here.
Resistance, okay.
So price can't get any higher than this. So in this case, normally I would look to sell the market right here because I see that the buying power has slowed down and the market went sideways. It's just doesn't know what it wants to do at this point. And then eventually the buyers run out of steam and then the market shoots down right here to this floor at this point right here. And then at the floor, you see that at this area right here, you got rejection. And the sellers that push the market down from here, they can't push it any further down because buyers came back into the market and pushed the market back up right here. And it kept going up. So obviously where we are right now in the market, we're here in this area up here at the top. We're near a ceiling right here. And the higher the time frame is, the more likely that it will react to that level. So this blue line is a resistance, support and resistance level from the weekly chart. And as you can see right now, it pushed up and it's reacting to this level right now because it's very hard for price to break through a level from a lower time frame from a higher time frame. So we're looking at the 1 hour chart, and this line, this blue line right here is a level from the weekly chart. So the weekly chart, you can see that it's already started to reject, right?
Okay.
And that's what this wick is. Remember the extremes from the wick.
Yes.
It pushed up all the way up to this point, and now it's rejecting price. And then on the lower time frames, you can already see that on the 4 hour, you can see it. You can see the rejection on the 4 hour. You can see definitely see it on the 1 hour. And you can see that price came down once it got to that point. And then you really be looking to take a sell at that point. Another reason why you look to take a sell at this point is because we have had we had the government open. So
yes,
because we're trading British pound against the US dollar, we're going to assume that the US dollar is going to be a little stronger this week because of the government opening, and that's going to bring probably into the market a lot of people that are pushing the US dollar strong. And when the US dollar is strong against GBP, it's going to make GBPUSD go down because the dollar is stronger. And we've been trading within this channel, for a little while. It's been like ranging through this channel, right?
okay.
And we'll probably look for this to come down to this level right here, or continue down here and break this. So we'll look to try to get into this trade here around somewhere around this 1.3196 area, and take the market down with once the market opens up. And so with this particular trade, I'll be looking to take this for like 20 to 30 points. And the points are calculated by using this little dragger right here.
Okay.
And so this has the potential to drop for right around 60 points right here for this trade.
Let's see.
And so when you are taking the trade, you want to try to make sure that you get yourself in the most highly probable direction. In this case, the most highly probable direction is a downtrend because of what news is going to come out, and because we got potential. We got the potential of the U.S. dollar pushing up after that news come out. And let me go to the news site. This site, I'll send it to you. This is where you can find out news about the pairs. Yeah, I'll send you the link. Anytime you want to see what's going on with the pairs, the more important, these little icons, I call them folders. The more important ones are the red ones and the orange ones. There's some other ones too, but I filtered those out because these are the ones that are most impactful. And it looks like on Monday, we got news on Euro pairs, British pound pairs, and New Zealand dollar pairs. So around 9 a.m. and 9:30, I'll be looking at these pairs to see what happens with this news and how it reacts to the news. If it's something that I can take advantage of that's going to be something very significant, then I can make a trade based off of that. This detail column gives you information about what this news implies. And so we can see this one. This is a President Dragan's speech. And we looking at a possible uptrend if it is good news, downtrend if it's bad news. So we'll just like put that in our pocket, note that. Got another one about British pound, Great British. We got another folder on GBP pairs. So we'll take this, put it in the note. It's like this happens at 9:30 a.m. tomorrow. 9:30 a.m. on Monday. And this will be something else we keep in mind while we trading. This one as well. If we trade New Zealand pairs, I don't really trade New Zealand pairs, but if you were to trade these, then you would have to take this into consideration. And that's right around the time when their market opens at 4:45 p.m. It opens at 5 p.m. Eastern Standard Time. So this will be right before the market opens for them. So this actually would be a good way to take a trade because you get the opening breakout. When like soon as the market opens, you get price moving in a certain direction, probably based off of this news. So that would be a really good setup to take, but I'm not trading that pair. I'm not going to trade that. The way that I look at the market is kind of simple. I look for what's called swing points, and a swing point is possible places where the market will change direction or come back to. And so like you can see, like every time there's a long wick right here or one of these, price kind of gradually comes back to that point, right? You can see that this created this area, right? These little long rejections. And then price went up, but it came back now to this area right here. And I would be looking to take a trade right here if it came back down to here. Same way we're here. Created this long little wick right here. That's a signal that price struggled at that point at some point, and it couldn't get any lower. So the next time it gets to this point, I'm gonna either have an order. If I'm watching it, I'm just gonna jump in the trade. Or if I'm not watching it, I'll put an alert to let me know when price gets back right here. I'll see how it reacts to this, if it breaks down further. And then if it doesn't, if it holds, I'll put a buy order in so I could have caught this move right here.
Let's see.
Same thing. And it kind of repeats itself over and over. You know, you look at historic patterns to see where it's going to happen. Like right here, you had this long wick right here. It came back to this right around this area. I could put an order in right here and take this up. And that's how you want to take your trades. You want to wait. You don't want to like just jump in whenever you see the market going up. You want to be patient and like let the trade come to you. And those are more profitable, and those are usually more profitable trades, and those are less risky trades. So if you jumped in right here and it's just shooting up in the middle somewhere, if you just jumped in this trade right here and then you don't know where it's going at this point, or if you jumped in up here, you don't know where it's going. So you want to try to stay away from areas like this where it's just going sideways, and wait for it to either break above an area like this or break below above an area like that and take the trade, or wait until you have a clear direction and there's clearly an uptrend. So you want to just look for points that it swings to those points and get in the trade from there. And I don't know if you're going to actually take this and move on and trade or not, but just the key things that you have to learn when you first start are your price action. Like what's an uptrend, what's a downtrend, what's support, resistance, what is support and resistance. So let me give you this. So the key things to learn, number one is, so we're gonna put this here. Oops. So the key thing to learn is trends.
Trends, okay.
How to spot a trend. That's number one thing. And then the next thing is support and resistance. Support and resistance.
Okay.
And support and resistance, those tell you where you're likely to have a change in direction in price. Where is price likely to react to those levels? Those are the main reasons why you need to understand support and resistance. And support, throughout the chart, you'll see continual areas of support and resistance. And remember, your support is your floor, and
the ceiling
is your ceiling. And
okay.
you want to know, you want to always know those, because that tell you where you are on the charts. Like if you're near support, if you're near resistance, that tell you what you should do when you're trading and how you should consider taking your trades. The next thing you got to learn is what is a pullback. A pullback is, I'll show you that. Pullback is what these areas that I was mentioning as swing points are. Price is going in a direction, in an uptrend, but it pulled back down to this level. It pulled back to this point. And those are where you want to look to take the most accurate entries. Those pullback levels and swing points are where you're likely to get the best points of entry. Like those are the safest points. And you'll see this on any kind of chart you look at. Whether you're looking at stocks, whether you're looking at options, like all the charts do the same thing. They just react differently based off of what you're trading. If you're trading gold, if you're trading Apple, we can look at let me pull up Apple stock, APPL. You'll see that it looks basically, you'll see the same types of behavior. Actually, let me go to trading view. So this is Apple. So if you were looking to buy Apple, right, you don't just jump in the trade. You don't just jump in, even if you're long term, you don't just jump in where just because Apple's going up and you think it's going to keep going up. You want to kind of look for those pullbacks and see where is it likely, what's going on with this invalid symbol. Oh, you know. Okay, so here's what Apple chart looks like, right?
Okay.
You can see that it's clearly got some upswings, some downswings. Let's look at it on the weekly. Got some upswings, downswings. So you want to look for those points where you can get a high level of accuracy where it can come back down to. So like if I was buying Apple, if I was thinking I wanted to buy Apple, this price would have probably been a really good level to consider buying Apple again at, because we can see that it's came back down to that point. And this is where price is right now in this area of consolidation right here, right? And the reason why it's at this particular point is because we had a level right here of rejection at support. We had another level of support rejection right here. We had another break. We had a break of this support right here. And so this is a strong area to consider right now. And that's why you have this tug of war right now going on. That's what the consolidation is. It's basically when price know where it wants to go. And the even on stock charts, you have these levels. And you have another one here. This got broken through. This level of rejection got broken. This level of support was broken through when it came back down to this level, came back down from this point, and it broke down through that. So those are the times, those are the most highly probable areas of accuracy when you're looking to get into the trade. We can pull up another stock as well. Let's see what Netflix looked like. Netflix, same way. Let's do it on a daily so we can see it doesn't matter what time frame. Got this level right here that is getting near right now. It's buying up as we speak because people all around the world are noticing that it can't break this level right now. It's came down to this level, rejected it, and pushed back up. Came back down to this level, rejected, pushed back up. This time it broke through and went down. This time it came up, broke through, and then rejected it and pushed back down. And we're in the same type of move right now. It broke through it right here, pushed all the way back up. This is another level to consider because you got this wick right here. And now people are buying it because it's near that same level of 315 again. So if you were looking to get in the trade on this, you would have gotten in around this time frame. And it came back down near this. Even if you're doing investing, even if you're doing day trading, swing trading, this is the way you want to kind of look at the market, because you want to try to, if you want to take a long-term trade, those levels of support and resistance will come into play. And those are the levels you want to try to take your long-term investments, take your day trades, take your swing trade, and even take your scalp. Because if you want to get in for a quick 5-minute trade, you still got to know where these levels are, because you want to know where you can take the best trade from, you know. And even inside of, if you're looking at an hour-long candle, if you're looking at an hour-long candle, this candle is actually giving you support and resistance. So for this one particular candle, the support level was here. The resistance level was here on this big green candle. That's the resistance. That's the support. So if you wanted to trade this one candle over that 1 hour time frame, you could come down to the 5-minute chart and just trade that particular candle. Let me find that candle. Hold on. Let me find that one candle that we were in. I think it's right here. So let me highlight that.
So are you creating the floor and the ceiling, or is it this software?
No, I just see where the lines. I just take it and find it myself, because you can see it as it goes on. Let me zoom in right here. So this is my candle right here, right? So within this 1 hour candle, if I wanted to trade this, let me switch to a 5-minute. Oops. So within this candle, just this one candle, we had our floor right here. And we know we got our floor because we had previous action down here. This was our ceiling up here. We knew we could trade it within that hour between this low and this high for that hour. And now moving forward, this could set our base, our resistance, and our support. And we can, after that 1 hour time frame, we know that we can trade all of this area right here. Because if it breaks above this, we know that we're done. If it breaks below this, we know that it's possible to come down to this point. So that's kind of the way you want to look at the market. And again, you see, I can show you the same thing on a stock chart or on this Forex chart. You got the same look, that you can see that you got support, you got resistance, you got pullbacks, you got a trend, and that comes from every market. Hang on one second. And so now when I'm ready to actually take the trade, so when I'm ready to take the trade, I'm looking for candlestick patterns to set up to tell me if I should take the trade or what direction I could take the trade in. And some of the key candlestick patterns are that bullish engulfing candle. When you see a huge candle that's going to the upside, bullish candle, engulf a smaller candle to the left, or you'll see that it'll engulf several candles to the left. And you see it right here in this particular one that I already got marked off. This one engulfs this gray candle. This particular engulfing candle engulfs this candle and most of this candle. So we know this one is going to kick. It's signaling that it'll go up. You can take this trade initially. You can take this, but you want to make sure that you are, if you're going to take this trade, that you have stops in to keep you from losing out on this trade, and make sure that you don't take a huge loss. Because again, in trading is not a 100% type of, nobody is 100%. Nobody wins every single time they take a trade. It is, you have to manage your trades so that you know that if you do take a trade, it is not going to blow your account. Like you don't put bet the whole house, a house and the cars on one single trade. You want to take singles, you don't have to hit a home run. And sometimes you'll hit a home run, sometimes you'll get up to bat and hit a grand slam, but you have to take the singles, you have to take the walks, you have to take the doubles when they come, because that'll give you, that'll still give your account the ability to compound and grow, So you want to make sure that you take all of those, take the trade, and try to minimize your losses. And if you do that, that'll help your account grow. Another little thing that I use, I just open up this one account that I'm gonna build up with. I open this account with 150, and this is the goal that I plan on using to grow the account. So throughout my week, my pip goal is to get 250 pips, and I'm only going to use a 0.02. That means that for every pip that I gain, and a pip is calculated, I'm going to send you a little image so you'll see what the pips are. A pip is a percentage point of price that, and everywhere that price moves based on the lot size, it gives you a certain amount of money. So if I'm looking at a standard, one of these standard and major pairs, every time you see one pip move, you're going to gain 10 cents on the dollar if you're using a micro lot, and that's the lowest that I usually go is micro lot. So you'll get 10 cents for every pip, and a pip is calculated for pip here inside of this major pair is calculated every time that you see that the price moves up. So every time price moves up, it's moving up a certain amount of pips. And when you're looking at a major pair, the pips are calculated every 10,000. So anytime you see that price moves up 1 point in the 10th, the 10th decimal place, you'll get this your pips. You'll count your pips from there. So in this case, I'm looking at this price, and it is at 1.3196, right? So I'm looking at this 96 area to see where the price is going to move up. So if it moves up to 97, that means it just went up 1 pip. If it moves down to 95, that means it went down 1 pip. And that's on the major pairs. And I am going to wager a certain amount per pip to say that if this moves 0.01 pip, I'll get 10 cents, or 0.1, I'll get $1. And if I'm using 1.1, that's a standard lot size. And each time it moves 1 pip, if each time this moves up 1 pip, I would get either 10 cents, or I'd get $1, or I'd get $10 based off of each one of those pips. So if this moves to 96, from 96 to 97, I would have just profited $10 with a standard lot. If it moved and I was using a micro lot, then I'm getting 10 cents I'm getting $1 per pip. I'm sorry. And you want to try to make sure that you kind of follow a measure to keep you from taking the minimal losses. So for this $150 account, I'm only going to use a micro lot times 2. So I'll be using 0.02, and I'll be looking to take this account from this 158 getting 250 pips in a week, using 0.02 to get a goal of $50 for that week. And I'll look to build it from there, and I can use this spreadsheet to kind of calculate where I could potentially see if I keep following this same path. So I'll send you guys this if you want to get it. So again, I'll start to look for my 250 points a week, and that's me either taking a swing trade or scalp trade or whatever I see on the market, because I kind of trade hybrid style. I like to trade swing, I like to trade day trade, and I like to scalp. I trade what I see in the market. If I see a position that I can take for a scalp, I'll take that position. If I see something that I could take for a day trade, I'll take that. And then my goal is to always end up in a swing trade. Is even if I get in for a scalp and I can take this off of the 15-minute chart or the 1 hour chart, the goal is to take this from a scalp, take this long term, because I don't want to just get in this and get 10 pips when I can get it 100 and something on the higher time frame. So I always look to take my entries to go long term. So what else? But the pairs that I'm going to be looking at this week is going to be GU, and I'm looking for it to go down again because the dollar's coming back strong because of the government opening. Same thing with GBPJPY. Hang on, GBPJPY. I feel like that one's going to take a similar move, because you can see this GBPUSD is looking almost the same as GBPJPY. Same type of action. Right now we got rejection around this 144.462 area. So already showing signs of rejection on the 1 hour. We go up to the daily, on the 4 hour, we still see the rejection. It's moving in an uptrend, moving in a channel pattern, and we have the rejection at this same level of rejection. Same level, looks almost identical to GU. So we'll look to take the same direction for this trade. On the weekly, we have the same view. We got a rejection level at this level on the weekly. So again, I'll be looking to take both of those down to the downside and take a sell on this. My first level that I look to take profit for GU would be near this wick right here. So this wick is 144.197. And then if it pushes through that, the next level I'll be looking for is 143.454 to get back down to this level. And I think that based off of what could potentially happen on Monday and this evening, this will shoot down to probably this level and maybe even down here. So the ultimate goal for this trade would be to take it down to 42.74, and that would be 170 pips. But if you start seeing rejection at any of these levels, this level here, this level here at 144.223. That's still 20, 30 something pip move. If it rejects here, this is still a 90 to 100 pip move. And then, you know, you can take profit along the way. So, and it kind of looks the same way for GU as well. GU looks basically the same setup. You can't even probably tell this is a different chart. Hang on. This GBPJPY. This is GU. Same setup. You got rejection up here already. Should take it down to the first point. The first one may be here in this area for around 1.3157. First area of rejection that I think it could, you could see some pullbacks here. That's 37 pips. The next one is around here. This is a 60 pip move. If you can take it down to 1.3135, and then the ultimate is around this level, and that's 125, 100 and almost 130 point move. And that's at 1.3067. So that's what I'm looking at for these two pairs. And again, both of them I feel like will react to the positive news of the government opening again. US 30, US 30. This I usually trade from the 15-minute, and I traded from the 15-minute because it's highly volatile, it's risky pair, and I try to get in, get out on this pair so that way I can just take what the market give me. I don't usually try to swing this or hold this too long because I just want to get in, make a couple, and make a couple whatever, and then get out and take my money and look for another trade. So on this pair, let me document this right quick. On this pair, I'm looking for it to be kind of strong because same reasons as I mentioned before, dollar strong. So we should have some movement to the upside on this, along with it, with the fact that that news came out. So I'm looking for the whole week for U.S. pairs, any U.S. pairs to be a buy because of that news. So because I'm looking for a buy, I'm going to be looking for rejection signs, and I'm going to be looking for these long wicks on the bottom. Anywhere it starts to see long wicks, and like right now, the market's closed, but if we open up and we start seeing the market push down, if you start to see wicks like it is right now at this level, or maybe from the hour, let's look at the hour. So yeah, if you see rejection wicks at near or around this area, this price point where it is right now, price is already at 24,723. It may come back down into the 600s, and as low as, I feel like as low as 650, 24,650. Look for rejections up until that point, and then I look to take a buy after that, because you'll probably see people taking profits if they've been in this move right here. If they've been in this move, you'll start to see them take profits. So this will push down a little more, and look for rejection at this level, and there is another level in here too, which is right here. And I look for rejection at these levels these are the most recent levels of, these are the most recent pullbacks. So I look for the rejection at these points and try to take the trade off of one of these zones to get in for a trade on US 30 from the 15-minute though. And if I can get in this trade, I would try to ride it and ride it up, back up to this resistance level from the weekly. And that would be my ultimate profit target. So if I got in right here, I look for it to push from this zone to this one. And if it gets in, same way, if it drops down to here, I'd still be looking for it to ultimately come back up to this level. If it doesn't, I would take profit at this point if it comes down here, or this point if it comes down here. If I took it from the same thing, if I took it down from here, if I got in for a buy here, my first profit target will be here. And then I look to take profit along the way throughout between this zone and this zone as it pushes up. So those would be my areas for US 30. And that's how those are the three pairs that I'm going to be looking at. US 30, of course, GBPUSD, GBPJPY. And if it's any other, are there any other ones that you guys want me to look at? You, Nadine, you got ones you want me to kind of go over? Nadine's not on. Okay. I guess you're not here. So with that being said, since no more questions, what I'll do is I'll post this on my YouTube page so y'all can get to it. I'll also I'll send you a couple of links, Tori, so that way you can go over some of this stuff if you want to try to take this any further. I host these all the time, whether it's one person, 2 people, 3 people on here, I don't care, because it helps me out just by talking about this, whether you guys are get on or not. So again, if there's no questions, I'll go ahead and end it for the day right here. And I appreciate you guys for jumping on and listening to me rant. All right.